Everybody says that these higher mortgage rates are going to make less people interested in buying a home, which is why people are saying that we're going to see a slowdown in the housing market in 2022 because of the higher cost to buy a home. Now remember, there's a difference between a slowdown in the housing market and a housing market crash. A slowdown means less people are buying a home now than before, and a crash means that home prices are going down quickly. And this brings me to the next point that I want to talk about, which is, are we going to see a housing market crash because of these higher interest rates? It depends what cracks first. Inflation or housing prices. The Fed is now starting to raise interest rates to fight inflation. Now, this small rise in interest rates probably isn't going to crack the housing market. But if interest rates continue to go up and inflation doesn't go down, well, you're going to see less people wanting to go out and buy a home because, well, it's going to be a lot more expensive to buy a home. And it's just going to depend on how fast and how aggressively the Fed has to raise interest rates relative to how strong the economy is. Higher interest rates affect more than just the housing market. I mean, when you have higher interest rates, credit card debt becomes more expensive and business debt becomes more expensive. So it becomes a lot more expensive to live and operate, which means you could see a slowdown in the economy. Now, the Federal Reserve Bank has said time and time again that our economy is robust and it can handle higher interest rates, but we don't really know if that's true until we see it happen. And so if the Fed starts raising interest rates and the economy slows down, well, that means that people will start losing their jobs. If people start losing their jobs, then they're going to have a tougher time making their mortgage payments, which will ultimately hurt the housing market. But if the economy continues to stay strong and you continue to see wage growth and people start to make more money from their jobs, well, then that could also support higher home prices, even though interest rates are going up because, well, people are making more money. But there's a lot of ifs there. And so you have to pay attention to each one of these things because it's not just what's happening to mortgage rates, it's what's happening to home prices, what's happening to mortgage rates, what's happening to the economy, what is the Fed doing, what's happening overseas. All these things come and play a part in the housing market, and we have one big advantage in the housing market right now: equity. The reason why our economy and our housing market is nothing like 2008, at least yet, is because of equity. So right now, let's assume that you bought this home for $500,000 6 months ago, a year ago, a few years ago. If you bought this home for $500,000 more than, say, 6 months ago, you have naturally some built-in equity in your home because home prices have been going up pretty much across the board. I mean, in 2021, we saw home prices grow by almost 20%. So if you've seen 20% appreciation in your home over the last year or so, well, that means you bought this home for $500,000 and now the home is worth $600,000. Now, this is almost like invisible money that's in your home, and if you lost your job, if you can no longer make your payments, well, you're not going to go into foreclosure because you can sell your home and walk away with $100,000 in your pocket and downsize and do whatever you need to do. You have built-in equity into your homes. We didn't have that in 2008 because in 2008, it was the complete opposite situation. People bought homes for $500,000 and now the home was worth $400,000. So you couldn't refinance, you couldn't sell. The only option was for you to be foreclosed on if you couldn't keep making the monthly payments. And you also had a lot of people getting adjustable rate mortgages with a bunch of really bad lending. So the first advantage that we have right now is people have this built-in equity. If you bought a home more than 6 months ago, chances are you already have some built-in equity in your home, which is a good thing for the sustainability of the housing market, which is a good thing because that prevents foreclosures. If things start to turn, that means that you'd see home prices start to go down, this equity will start to go down, and chances are we'd also start to see more adjustable rate mortgages start to pop up. So those are the things that you want to pay attention to over there, but you also want to pay attention to one last thing. You have to pay attention to the supply and demand in the housing market because at the end of the day, as long as you have more buyers than sellers, that's going to keep pushing home prices up. But if you have more people wanting to sell their home than people want to buy their homes, that's going to push home prices down. Now, I didn't do good in my economics class, so these type of demand and supply charts always scare me. But let me go over what's going on. So on the demand side, we have had a massive amount of demand of people wanting to buy a home because you had the low mortgage rates, people were moving out of cities, people wanted to work from home. So you had a massive amount of people that wanted to buy homes and take advantage of these low mortgage rates, while the supply of homes have been artificially very low. Part of the reason is because builders haven't been able to build homes, they can't source materials, it's harder to find labor, it's more expensive to find labor, it's more expensive to find materials. So the supply of homes has been very low, and on top of that, add in the pandemic and having a tough time finding people that are willing and able to work. So we've had a very low supply with a very high demand. These two factors together have pushed up home prices. But now what we're starting to see happen is demand is starting to slow down. It hasn't gone away, but it's starting to slow down. We still have high demand, but it's starting to slow down because home prices are becoming more expensive, mortgage rates are more expensive, and we're starting to see the supply of homes trickle upwards. People are building more homes. We're starting to see more homes start to finish their construction. And so we're starting to see this type of convergence. The question is, what's going to happen next? If mortgage rates go up significantly and we start to see demand of homes start to go down even more, well, that's going to affect the demand side, but you also have to look at the supply side. If builders can start constructing and building more homes faster, well, then we're going to start to see a flip, because then you'll start to see more supply than demand, and that's what pushes home prices lower, because now you have more ability for people to go out and buy homes, and that could push home prices lower. Now I say could because, again, you have to look at all the other factors that I talked about, but these are the two factors that you want to pay attention to when it comes to the demand, how many people are buying homes and are able and ready to buy homes, and how many homes are available for sale. This has been one of the biggest struggles in the housing market, that we've seen a small inventory of homes, some of the lowest inventories of homes ever, which is why you've been seeing so many bidding wars, because everybody's trying to fight over just a few homes that are available for sale. So you like a home and then the next day it's gone because there's not that many options out there on the market because you have such a low supply. So if supply starts to go up while demand is going down, then that could start to flip the housing market. Again, to trigger a crash, you would have to see the equity go away. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income, and different passive income strategies. These are things that you can start doing even if you don't have a lot of money. So if you want to read this free guide on how to start generating passive income for free, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.